Financial Massacre 2025, is Tesla just the first sacrifice? The Soros Financial Massacre of 2025. You can laugh at Warren Buffett for selling USC stocks and missing out on the internet stock boom in 2000, as well as last year's AI stock surge. But there's one person you can't underestimate. It's been 28 years since 1997, and this individual has been waiting all that time. When it seemed like the world had forgotten him, he never put down his hunting rifle. He's always been lying in wait, patiently stalking his prey, waiting for the perfect moment to pull the trigger. Because if he shoots too early, the prey will be scared off, and all his efforts will go down the drain. And now, after years of waiting, he has finally fired his shot. What does this mean? It symbolizes a meticulously calculated death warrant. If you still haven't grasped the severity of the consequences by now, if you're still blindly buying any American assets, whether stocks, bonds, or even just holding US dollars, you're going against the financial crisis that's staring you in the face. You're opposing the market manipulator, the organization led by Soros himself. In other words, you'll see that this time, Soros has set his sights on Elon Musk. Greetings, ladies and gentlemen, from the world of finance and fortune. Tesla stock, owned by Musk, has recently been maliciously shorted and has plummeted by 55%. What is short selling? It's simple. Normally, we buy stocks low and sell high to make a profit, right? Short selling works the opposite way. For example, let's say you just bought Tesla stock for $100. At that moment, you're holding Tesla stock worth $100. I want to short it, so I borrow your Tesla stock and sell it on the market for $100. Now, I no longer have the stock, but I have $100 in cash. When Tesla's stock drops to $50, I buy it back. Now I have the Tesla stock again, plus $50 in profit. Then I return the stock to you, along with $5 in interest, and I still pocket $45. That's short selling. Selling first, buying back later when the price drops to profit. If the stock rises, you lose. If it doesn't move, you still lose, because you have to pay interest to the lender. That's how small retail investors like us short stocks. So why did Elon Musk recently speak out, saying the reason Tesla's stock crashed so badly? Because a Soros-led manipulation group was deliberately shorting it. What does that mean? Step 1. Soros manipulates public sentiment. He controls a vast array of media outlets. In just a few days, 47 reputable media companies worldwide published over 3,000 negative stories about Tesla. For example, Tesla's sales in Germany dropped 70%, and sales in China and Europe halved. You wake up, check your phone, and if you pay any attention to the stock market, you're flooded with bad news about Tesla. Within a week, panic selling of Tesla stock surged by 17.8%. So, how does he manipulate sentiment? It's simple: through the media, through news that seeps into people's minds and shatters their confidence in Tesla. But that's not enough, because people need to see some tangible truth to fully believe it. So, step 2. When Tesla's stock hit its peak, Soros struck. He bought a massive amount of shares, then started selling them off. This sell-off accounted for 18% of Tesla's circulating shares on the market. In simple terms, it's as if he bought up all the Tesla stock held by 18% of its shareholders and then dumped it to crash the price. If you don't buy enough shares, what happens? You lend them to me, I crash the price, and then return them to you. Don't want to lend? No problem. I won't borrow from you. In reality, I borrow from your brokerage or bank, because when you buy Tesla stock, it's not actually in your hands. It's held by your brokerage or bank. So I just borrow from them. When you see the Tesla stock you bought getting hammered, and the price keeps plummeting, you'll start wondering whether to sell and cut your losses. If you don't sell, no worries. Others will. The more people sell, the lower the price goes. Soros keeps selling too. If you don't sell, the stock still drops until you're forced to. Still holding on? Fine. Step 3. Physical attacks. Dozens of Tesla stores had their windows smashed for no reason, and Tesla's charging stations were vandalized. So how can Tesla keep doing business? If Tesla can't operate, do you still want to hold its stock? But that's still not enough. Step 4. The knockout blow. When Elon Musk bought Twitter, he pledged 63% of his Tesla stock to banks as collateral to borrow money for the purchase. If he'd sold all that stock back then, Tesla would have collapsed, and he'd have lost control of the company. So he had to use it as collateral instead. But now, with Tesla's stock crashing, the value of the pledged stock has shrunk. For example, say you pledged stock worth $1.1 trillion, and the bank lent you $800 billion. Now the stock's value drops to $800 billion. The bank lent you exactly the current value of your collateral. If it falls further to $700 billion, the bank takes a loss. So they'll stop lending and demand you repay the full $800 billion. If you can't, they'll sell your pledged stock on the market to recover their money. Once Tesla's stock hits the bank's red line and Musk can't repay, the pledged stock will be dumped immediately. Then Soros's manipulation group can buy it back at rock-bottom prices and return it to those they borrowed from. If you think this is just a personal feud between Musk and Soros, think again. The entire U.S. stock market is tumbling too. If Trump wins, and a figure as big as Musk sees his stock crash like this, do you think other stocks will escape the same fate? This is a warning. Soros, a man who doesn't act lightly, has finally made his move, and he's not just targeting Tesla. I'm telling you, this is just the opening shot of a meticulously planned financial massacre. You'll notice this plan of Soros's plunder bears a striking resemblance to the 1992 collapse of the Bank of England and the 1997 Asian financial crisis. The only difference is that this time, his target isn't other nations, it's America itself. You might laugh now and say, "Who'd dare short America?" But I'll laugh back. The 2008 financial crisis started in America too. Back then, America essentially went bankrupt, and its banks collapsed. Yet today, America's doing fine. Why? Because while the explosion happened in America, the casualties weren't American. The world paid the price, not the American people. If you don't want to be a victim of this crisis, or even hope to climb the social ladder, you can subscribe to my channel. I'll keep providing you with more insights in the future. Worried you'll forget after listening and waste your time like this video? It'll save to your playlist so you can revisit it anytime to stay informed and act. First off, even the U.S. Federal Reserve, which manages monetary policy, has been losing money for years. The U.S. government is out of cash and can't spend. No one's buying U.S. Treasury bonds anymore. No one wants to lend to America. Plus, the AI-hyped stock bubble is bursting. Inflation in America is out of control. Every economic indicator points to a recession. Yet the Fed won't lower interest rates. More importantly, post-pandemic, America's become a ghost town. Offices and commercial spaces sit empty. With sky-high borrowing rates, property owners can't repay loans, leaving banks saddled with bad debts. Do you see what this means? The conditions for a malicious short are nearly perfect. If you still don't see the big picture, by the time the market truly crashes, it'll be too late. This script isn't much different from before. Just a new bottle, same medicine. When God wants to destroy you, He first drives you mad. Back when Southeast Asia was booming, China was raking in cash, and assets were soaring. Everyone went crazy speculating. That's when the praised defenses were weakest. Soros raised his sniper rifle and fired 3 shots, sparking the Asian crisis. Shot 1. Shorting Thailand's stock market. Soros targeted Thailand's big banks and financial firms, dumping their stocks. At the same time, top global media and even Thailand's central bank spread word that its financial and mortgage companies were in trouble. Panic ensued. People rushed to withdraw money. Defaults piled up, and Thailand's stock market collapsed instantly. Shot 2. Would Thailand's government step in? If not, the entire economy, stock market, and all assets would crumble. Soros could then swoop in and buy up Thailand's assets on the cheap. No need for a third shot, but if they intervened, they'd tap the national treasury. That's when shot 3 came. Thailand threw hundreds of billions of dollars at the crisis to stop Soros, but they didn't grasp the consequences. Soros attacked again, shorting the Thai baht, their national currency. He didn't stop there. He shorted currencies across Southeast Asia, dumping them and buying US dollars. He knew if the baht fell, other regional currencies would follow. He expanded the battlefield, launching a full-scale assault. Southeast Asia spiraled. Indonesia, the Philippines, Myanmar, Malaysia, and more couldn't escape. The result: Soros won big, walking away with a fortune, while Southeast Asia's decades of wealth and prosperity were wiped out. The fixed exchange rate system collapsed too. That's Soros' shorting strategy. 3 tightly linked shots, the first paving the way for the last. Is that script playing out again now? In past videos, I've said, you'll notice Buffett and America's capitalists quietly exited the U.S. market at its peak, holding piles of cash. So who's holding U.S. stocks now? Retail investors own 30%. U.S. mutual funds hold about 50%. Many think big institutions still control most of the market, but 90–95% of those mutual funds are owned by retail investors. In other words, 30% of U.S. stocks are held directly by retail investors, and 40–50% more are held through funds. Foreign investors hold about 10%. Rough math says 70–80% of U.S. stocks are in the hands of retail and foreign investors. So, if the market crashes, who loses? Not capitalists like Buffett, Gates, or Zuckerberg. They've already sold out. It's the retail investors and global money poured into U.S. stocks. So, even if this disaster explodes in America, it'll be like 2000. The capitalists will take government bailouts and zero-interest Fed loans to buy cheap stocks, while retail investors and the world take the hit. Why target Tesla for shorting? Some say it's Soros representing the EU versus Musk representing America, a personal grudge. That might be partly true, but the deeper truth is Tesla isn't just a hot stock under Trump. Until last week, it made up nearly 5% of the Nasdaq index, one of the few AI stocks with real potential, like self-driving and smart parking tech. That's why retail investors piled in. For shorting conditions, if Tesla falls, it'll spark panic selling, crash the US market, and pop the AI bubble. Plus, Musk has been selling his own company's stock lately. Combined with the tactics I've described, it's the perfect storm, timing, opportunity, and human factors, for a massive short. But the scarier part? Tesla might just be the start. Those dreaming that holding long-term won't lose don't realize their accounts are undergoing surgery without a scalpel. The world always makes mistakes, but many are taught from school not to fail. Their money's in pensions, banks, stocks. When markets crash, banks fail, and stocks bleed, they still tell their kids not to mess up. If they're not poor, who is? Kids only learn to walk after falling. To be a pilot, it's not about flying. It's about handling a breakdown. Investing's the same. In a bull market, anyone can buy and profit. In a bear market, the key is knowing the difference. Don't listen to the knife seller at the market. In stocks, making money isn't about spotting potential. It's about whether more money's flowing in to buy or out to sell. If sellers have stronger cash flow, even the best stock drops. The market's rise or fall is decided by the big players. The scariest thing isn't Soros shorting US stocks. It's that he's holding an ace up his sleeve 100 times worse. The final blow, based on past patterns, shot 2 is coming, triggering a U.S. liquidity crisis to force the Fed to cut rates. Soros excels at making central banks open the asset transfer floodgates. What does that mean? As America's crisis deepens, retail investors in funds will hit stop losses, triggering automatic sell-offs. In 2020, U.S. stocks plunged so hard, they tripped circuit breakers for this reason. When that happens, ETFs and funds retail investors bought will see mass withdrawals. Even the inactive will flee. The U.S. market will collapse entirely. The Fed will have two choices: watch America burn as global money flees, tanking the dollar, or act, cut rates, or print money to pump liquidity. In past crises, they've done both. Look at the U.S. market now. It's already tanking hard. The Fed predicts a recession, but insists no rate cuts. Why? Because cutting rates now won't work. In recent years, the Fed's been losing money. Why? They bought U.S. Treasuries long ago at an average yield of 2.6%, but the interest they pay banks has hit 4.4%. Cutting rates would lower their interest costs and stop losses. So why not? Inflation? No. The truth is, the Fed's losing control of the dollar. Last year, they cut rates 3 times. Normally, if Treasury yields are 5% and the Fed cuts, people expect 3% or lower, rushing to lock in 5%, pushing bond prices up. But after the September cut, bond prices fell. Fewer people bought. When the market stops listening to the Fed, rate cuts lose power. Even high-yield treasuries aren't selling now. Their values dropped nearly 50% in recent years. The U.S. Treasuries broke. If the Fed cuts rates, bonds will crash further, and banks holding them will fail. Cutting rates now could spark a new crisis. To cut, the Fed would have to buy bonds itself, expand its balance sheet, print money. If they print, the dollar supply spikes and tanks in value. See it? Whether the Fed saves or not, the dollar loses value. Soros has his minds set. Shot 3 could profit from a dollar collapse. He could short the dollar, but I'm not sure. Capitalists like him rely on America. A dollar crash might not benefit them. But when the dollar falls, money flees to safe havens like gold. Soros has been buying gold heavily. Its value could skyrocket. And here's a coincidence. Buffett's yen investments might pay off. As US stocks crash, money could flow to Japan, boosting the yen. Post-2008, gold rose 18 nearly 50% against the dollar. That's why I've invested in gold since last year and shifted to yen late this year. I've sold most of my US stocks. The profits were good and the dollar's at risk, so I've moved to gold and yen as a hedge. For investors or entrepreneurs, we don't need to predict the exact crash moment. We just prepare for the likeliest outcome. If it happens, we win. If not, we don't lose much. Just miss some profits. Buffett's a big player. We're small, so our tactics differ, but strategies align. When shot 3 fires, it's the great asset transfer. Who's the final victim? You might think this doesn't affect you, but it's simple. Taiwan's labor insurance fund, Vietnam's national wealth fund, Japan's pension funds, Europe's insurance funds, all heavily invested in US stocks. They'll cut losses and exit. Post-2008, global money was forced into safe US bonds. This time, with a crisis, will anyone buy? America must repay the world, but a weaker dollar erodes that debt. In 2008, America fell, but others fell harder. Who won? Capitalists betting on yen and gold, cashing out at peaks, then scooping up global assets cheap. Banks bailed out post-crash, bought global assets dirt cheap. From Greek ports to Korean banks. Firms like Goldman Sachs and Morgan Stanley didn't weaken. They grew, their monopolies deepening. Buffett's wealth surged most when he bottom fished in 2008. The key from now on: what assets rise matters less than holding must-haves like gold. We want cash to pounce when shot 3 triggers a global fire sale. Ultimately, Soros gets flack for shorting markets. But whether he does or not, US stocks and bonds face a serious crash risk, and a US financial crisis seems inevitable. It's always been there. Soros just lights the fuse and takes the blame. When it crashes, Wall Street media will hype a Trump recession, Musk layoffs sparking outrage, rising unemployment. Some will blame the Fed for not cutting rates. But as I've said before, a US market crash benefits the financial titans behind the Fed, and even the government. They just need a scapegoat. Soros doesn't care about his rep. He makes money and leaves. If a shorting titan like him strikes first, it spurs others, amplifying the chain reaction. If collapse is inevitable and everyone dodges blame, Soros, even if he triggers it, is just the fall guy. I hesitated to say this, but I will. Before the flow of capital, there's no good or evil, just the rich getting richer and the poor getting poorer. Which side do you want to be on, rich or poor? Will this unfold as predicted? How will we adjust? Time's short. So I'll end here. I share free insights on becoming rich, an entrepreneur, an investor, and achieving financial freedom. Don't miss out. Subscribe, hit the bell, and share this freely. I sincerely wish everyone who liked this video achieves financial freedom soon. If you found even 1 or 2 useful lines to live better, I'm satisfied.